We are here on this amazing day. Okay everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay everyone, we are marking up CAD JPY. You're going to head over to where price began. This is back in November 1st. The market pushed straight up and ran right into a resistance area. From there, the market pushed back down. I also see a formation here. So the formation is a W, and after the W, most of the time we see a retest and the market shoots up higher. So this is the first leg, second leg, third leg, fourth leg. That's the double bottom. So when you get to double bottom, the retest could have happened here, and then shoot up to higher highs. But the market, what it did was, the market went and it broke through the support and it headed down to the next area of support. It created enough momentum for that retest so it can push up after the double bottom. From there, the market danced around on top of this resistance line, and when it broke through, it became support, and there's a formation in there. It looks like another double bottom, and this will be the retest up here, and the market went up higher. And this would be the first leg, this is the second leg, this is the third leg, and this is the fourth leg, and this is the area of the retest. So what the market did, it put itself in a range for a moment. Market broke through, came back to retest, went back to higher highs so it can touch the support, wasn't able to break, went back down to this area of support, and then the market pushed up. Formation, so this is a double bottom, first leg, second leg, third leg, and it's the fourth leg. And after the fourth leg of a double bottom, the retest should be happening. The market came back down for the retest right here, and then the market will push up to create new areas of higher highs, and exactly what it did. So this is the highest the market has ever been, and this is back in October 07. The market, so this is a major area right here. This is a pattern. So when the market came from lower lows and went to higher highs, it ran itself into, it created a pattern here, what pushed the market down. And what pattern is this? Is this green bullish pattern to the bearish pattern. The bearish pattern engulfed the bullish pattern and it went down. So the red overlapped the green candle, it closed out, and that showed that the market may push down, and that's exactly what it did. It actually went back down to the previous areas of support. It broke through, came back to retest previous areas of resistance, and then we got that final push down all the way to the bottom. Very, very, very bearish. Market pushed back down, broke a few SR lines on the way down, and it went back into areas of lower lows. Once the market went back in this area of lower lows, it kind of just consolidated within these three SR lines, bounced up and down, looked like it's trying to reach areas of higher highs, wasn't able to break through the next level, so the market just went back down and came back to retest previous areas of lower lows. So it came up to come all the way back down to come up again. There's a formation that pushed this up here. I'm going to identify it for you guys, and it's right here. It's the double bottom. So market basically pushed up, it came back down here, and it pushed up again. I'm about to draw the formation of the double bottom. After the double bottom, we would see a retest and the market would push up. So this is the formation of W, double bottom, first leg, second leg, third leg, and this is the fourth leg. So once we get the fourth leg, that creates the formation of the double bottom, and this is the area of this red candle. This is the candle that's retested previous areas of support, and then it created enough momentum that we had that full push up. It tried to come back down to the support. It pushed up again, so it's some type of pattern trying to form. I see a double top here so far, and then the market pushed right back up to try to break previous areas of resistance. I think there's a pattern right here, which would be called the I got it right, the morning star or the evening star. I can't remember which one is what, but this little doji up top, this red doji, is supposed to be the indecisive candle that pushed the market back down, and that's exactly what it did. The market went up, wasn't able to hold, and we seen the pattern, which is either the morning or the evening star. Market pushed right back down, and it retested previous areas of resistance, and then the market dropped all the way back down to areas of lower lows, back where it started with, and back in the areas of support. From there, the market just bounced up and down here to higher highs, back to lower lows. There's a formation here, so we got to figure out what is going on in the market, one, and what's going on in the market. So once the market reached lower lows, this lowest has ever been, if it breaks a layer, it'll go down further. If not, most likely it hasn't broken this lower level plenty of times. There's plenty of touches here, so most likely the market's trying to go back up the previous areas of higher highs. So let's identify, see if we can take a closer look at price action to figure out what is going on in the market. The last active candle is the price action candle, which is the green candle right here. So we got to find out our overall trend. So it looked like we're in an uptrend. So we know that we had lower lows. The market's trying to break through previous areas of resistance. So we are in that uptrend. We're looking for price to return somewhere up to previous levels of higher highs. If it break this, it's probably going to try to head up to the next level higher. So we figure out our trend line. We're going to head over to price action once more, and we're going to look for our SR lines. The way we figure that out is we go to price action, you look over to your left, look to see what price is trying to break. So we can see that clearly price is trying to break these peaks. Peak here, peak here, peak here, and yeah. So if we drop a SR line here, that will cover us where price action currently is trying to break. Next we can go one level up. It will probably try to break this peak right here. And if we had to go back, so hold on. So instead of grabbing this peak right here, there's something going on right here. So I would actually grab this right here. Just in case, if I go down a time frame and it's really close to this red line, I'll just go one more level up. Most of the time I just put 3 SR lines, but today I may put 4. I do feel that the market may be close to the SR line below the one I'm working on. So if we go back to price action, we sit here and say, okay, with price action doesn't break this to go to the next level. If it goes back, how far would it go back? You would grab this peak area here. So there's a whole bunch of stuff going on in here. So I will grab this. So I feel like if price goes back, this is how far it's going to go back. What we're going to do next is we're going to head down a time frame. We are going to tighten up our SR lines. We are going to do a top-down analysis when it comes to looking for peaks. We are working on creating SR lines in between our red lines from top to bottom. There's a peak here. there's a peak here. It looked like something's going on here. There's a few peaks here. And that definitely got respected very well. And it's possible there's a peak here. This one is pretty hidden. Not really. I just caught it at a different angle, so I see it here. And you can also see that it respects it because it plays out here again. So you can grab this peak here or grab this inverted peak here, and it lines up perfectly. Okay, so we have created SR lines on our time frame. So when we taking the trades and we candles are breaking through our SR lines, what our focus is when taking a trade, all we doing is trading the breakout and the retest. So for example, if I have a few SR lines here, so I have 1, 2, 3, 4. So what we're looking for price to do, so price, when we take an entry, we're looking for price to break the SR lines. And when you see it here, that means, we're not going to take entry here and take it further up right away. What we do is we wait for the market to break our SR lines, to come back to our SR lines. In this area here, we'll look for entry and we'll take it further up to the next SR line. So we trade the breakout and the retest. I'll show you once again, but make it a lot more clearer. Price goes up, come back down to retest previous area support. Right here, we'll be looking for entry to take it to our next SR line. Once we take it to our next SR line, we wait for the market to break this SR line, for it to come back down to retest. And right at this point, we'll be looking for entry to take it to the next SR line. Once again, we wait for price to break our SR line like it's doing now. Price would come back to retest our SR line. When it's on our SR line, we'll be looking for entry to take it to the next SR line for the TP, but take profit. And that's exactly where it goes. It don't always break each level and come back to retest. Sometimes it breaks 2 levels at a time, as in 2 SR lines, or maybe 3 SR lines at a time, and it comes back to retest, and it can shoot up higher to retest and shoot up higher. So it's a lot that you can do. So just trade the breakout and the retest, and you guys will be fine. Next, we are going to head down the time frame. We're going to see if we can find. We're going to stay in this time frame, see if we can find some type of pattern in the market, and see what's going on. So on this time frame, we're going to head to price action, which is the last active 2 candles. We're going to grab a rectangle, and we're going to grab our highest high, which would be this wick, and we're going to draw it down. Let's say this, just grab for right now, let's grab it to the bottom of this bearish wick. So if we go down the time frame, something's going to go on here. So we just got to wait to identify itself. So I'm going to tighten this up a little more, and we're going to go down the time frame to see if we could identify what the market is doing. Before I do that, there's something went on here. Okay, so I'm trying to erase this. 1 second. Okay, so something happened here, and I'm going to see if I could show you guys the formation of what happened down here. So the market was at lower lows, which is down here in this area. Things formed here, something formed here, but I want to pay attention to this area right here. So this area is what drew this price action up to the highest high. Now price is trying to come back down to see if it can work its way back up. And I'm going to show you guys what's going on. So this right here is formation of a double bottom, which we have called the retest and the push up. So this is the first leg of the double bottom, second leg, third leg, fourth leg, and then we got the doji right here, and this is the area where it retested. And then once we got that retest, the market pushed up to higher highs. So you remember, most of the time after formation of a double, after formation of a double bottom, the market retests and shoot up to higher highs. Now we got to figure out in this area, what is the market doing? Okay, so we're going to grab our rectangle again. We're going to grab the highest high of this wick, and we're going to grab the bottom of this bearish, look like doji so far, active candle, and we're going to leave it right here. We're going to check down the time frame to see if we can see some type of pattern in the market, and there's nothing yet. The market is kind of still drawing it out. So this rectangle that I placed, if price breaks below it, it'll probably go down to the next level. We see the pattern, we can take it back to the upside for the highest high. But at the end of the day, if we stay in this square or this rectangle, we may need to stretch it out as the days go along. But whatever the market is going to do is going to show in this right here. So all you have to do is wait, and the market is going to reveal itself for the trade. You guys can figure out the pattern or whatever's coming if you guys go to Google and you type in Forex pattern cheat sheets. That's Forex pattern cheat sheets on on Google, and you go to images and you just watch the images of the Forex patterns. You do not have to remember what's the names of the patterns. The most important thing, at least for me, is visualizing what I see. Just remember what I see, because there's so many patterns in the market. To sit here and remember every name to every pattern, I don't think that's ideal. Each his own. So at the end of the day, if you wait right here, the market's going to reveal itself for the trade. We are in an uptrend, so we're looking for some type of pattern. So if the market drops further down, let's say it stops right here and a pattern forms, it's maybe some type of engulfing. We can see that, okay, maybe the market may try to go up, but we don't know what the market's going to do. It's a waiting game for right now. We know it came up from somewhere, created higher highs. It can do a double bottom, something like this, for example, and it can shoot up to new levels and create new levels of higher highs. The market can also probably do like a double top and come down. So if the market comes down, it'll probably go as far as our computer's glitching. It will probably go as far as our trend line. I'm trying to get rid of this line. It's just following me. It's glitching my computer out. So let me see if I can change the pattern. Okay, so if we was taking this trade and we seen the type of pattern that it formed, and we was jumping in our trade, the question would be, how far would it go? My computer is glitching. And say this is price, and we would take it up to the next SR line. Trying to get all around this. 1 second. Alright guys, my computer glitching out. I'm about to skip this CAD JPY so far, so I can't probably go on because it's not letting me continue. My trace is on and it won't turn off. So just finish what I'm saying. All you want to do is just wait for the pattern to reveal itself in this rectangle, and then you take the trade to see if it's going to go up to the next level of our SR lines. I would love to try to put the TPs on it to a T, but for right now what's on here is if it breaks through what price actions currently is, if it heads up 1, 2, 3, 4 levels, can give us a total 177 pips. But truthfully, I probably wouldn't would it set it there for sure. I probably just set it to my highest high, which will be where the top of this rectangle is, because we're looking for a price to return here. And once it returns there, we'll wait until it breaks out to see if it's going to go higher. Which is an amazing move for CAD JPY. We just got to wait for the trade. Most of the time when it comes to Forex, it's a waiting game. Please have patience. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.